Let's pick up on the overall growth story that we're seeing in Nigeria at Adegboyega now, because of course Nigeria is very ambitious in its plans, patiently or impatiently waiting on the sidelines, some would say, to really take over as Africa's largest economy. From your standpoint, what are the key factors that are playing into the growth story in Nigeria right now?
Well, one thing's certain, we certainly have a very focused economic team right now. You've got a crop of professionals, a crop of pretty much experienced persons who think through what they're about to do and giving proper direction to the government. There is an interesting inclination towards agriculture now. And as you well know, there is a vast potential in that area that's yet untapped. And if we can get that right, it's pretty certain that agro-processing industries are going to just flow in through there. But it's also important that we get power right. Now, that's been a bit slow in terms of privatization of the power sector and in terms of meeting the total output in terms of megawatts. But I guess it's important we get it right rather than doing it too fast. There's also an increasing awareness by the populace in terms of what governance obligations are. So that challenge to the government is going to actually make sure that the right policies are the ones that come about and implementation takes place.
It's definitely a head-on battle, though, with South Africa, and looking at where the economy stands in terms of size, it's still only 2/3 the size of South Africa. You've got growth, though, of around 7% and upwards projected for the next few years, while South Africa's economy only growing at around 3%. But it's important to notice a GDP per capita, because South Africa stands at almost $8,000 per capita at this point in time, and Nigeria's is around $1,500 per capita. So there is still that big discrepancy that Nigeria still has a big catch-up play.
Well, you know what they say, the devil is in the details, and it's all about statistics. South Africa may have the production processes, may have the manufacturing sector, but the market, the largest market in Africa is still in Nigeria. And that's probably why you have a push in terms of South African companies, in terms of products going there. One thing's certain, I did say something about agriculture much earlier. When you start having the greater percentage of the population involved in what's going to contribute the most to the GDP, then you start having that increase in terms of the per capita GDP. Also, you've got a more matured and perhaps more balanced economy, so your growth rates aren't going to be as high as ours. In Nigeria, there's still a vast potential that needs to be taken care of, and that's going to require significant investments. And it's beginning to be attracted, in spite, you know, of what fears there may be. The greatest fears are legal and contractual, and once we start to show in Nigeria that there's a lot that can be done by foreign investors to develop certain sectors with the active support of Nigerians working with them, I don't see why we can't in fact excel those growth figures.
As you say, the governance issues have been really highlighted, but at the same time, it is interesting that whilst South Africa and Nigeria might be taking each other on at a more macro level, there are a lot of South African companies that are coming into Nigeria. They're either entering into JVs with local Nigerian companies, they're buying small stakes in Nigerian companies. Old Mutual just recently bought a small insurance company. Tiger Brands has a JV with UACN. What are your views on the type of collaboration that we're seeing on the one hand between South Africa and Nigerian companies?
I think it only works well for both countries. I'm not surprised. I think it's the way to go. Like I said, it's the play between the largest market and where you've got efficiency in terms of services and production. And interestingly, it's not just in terms of insurance, like you said, in UAC. In the hospitality sector, it's amazing too. We've got the Proti hotels. They've been around for a while in Nigeria. We've got Sun International and Southern Sun having a presence in Lagos right now. And I'm certain the way hotels tend to think, they're working their way up into Abuja. I'm pretty sure of that. And we've got legacy hotels just opening, Wick Baker Hotel somewhere in Lagos not too long ago. So yes, the companies are working together, and perhaps it's interesting that there are a good number of Nigerian companies They may be stuttering in terms of governance, in terms of ability to raise capital, and in terms of being up to date in what they offer. And I think those provide significant opportunities for South Africans to collaborate and then get a foot in to Nigeria.
Let's take a look at growth sectors. Agro-processing is one that's underrepresented on the markets, but the food and beverages space, the consumer space, is very much well represented through the likes of Nestle, through the likes of UACN, those more conglomerates companies. But GDP growth and the growth of these consumer companies tends to move in tandem and mirror each other. Are you still as bullish of getting in terms of getting exposure to food and beverages companies, fast-moving consumer goods?
Well, it's always been a sure bet for me, particularly because of, one, the way they respond to inflation, two, their ability to work out their processes in terms of efficiency when there are changes in the environment. And it's interesting you will mention Nestle and Cadbury, particularly Cadbury. Cadbury is beginning to emerge from what may have been its lost years, in quote. It's improving on its efficiency. It's putting a lot more in place to make its production processes quite cost efficient. And its household brands are there in the market, regardless of what inflation
Are you a Cadbury's or Nestle's man?
Well,
because we saw Nestle's results coming out also, and ambitious growth plans there.
Yeah. Well, again, it's an interesting play because, well, Nestle is a comfortable stock to have in your portfolio, but the kind of returns you're going to get there aren't going to be as high as what you get from Cadbury, which is a growth stock. So if you're looking for income in nominal terms, you want to hold some Nestle, but in terms of growth with a longer-term outlook, I'll be looking to Cadbury. Because they'll probably grow at perhaps at a faster rate because they need to play catch-up. And you've got an interesting governance team in there working on that right now.
So a recovery story, a growth story for you, Cadbury's. Let's look at the brewery sector. And one that SAB Miller has yet to make headway in. 90% of the market share is dominated by Nigerian Breweries, with Guinness in second place. Yeah. You've got forecasts of around 12% in volume growth this year. What type of upside are you seeing, though, in the stocks for 2012?
Well, it's going to be an interesting year in the brewery sector because I do believe SAB Miller is ready to make a play this year. There's presence, and it's time to start pushing out the products. But like you said, the dominant players are there. Nigerian Breweries they've undertaken some acquisitions of recent, and with all the old and dormant breweries snapped up and ready to be worked on and to start pushing out products, I think we're going to see a lot happening. The fear, though, is that we need to be mindful. If the consumer price index still pushes up, what will happen to the price of these products? If inflation continues to rise, and one just is not too much aware of what may happen later on, the consumer purchasing powers may drop, and this would affect alcohol sales, beverages, because people will tend to shift more to the much more important aspects of consumption than to alcohol. But it's a sector that has always seemed to survive regardless of what inflation says, regardless of what goes on. The volumes have risen, and the turnover in that industry has also risen. So, well, I think it's one that I'd like to see how it plays out for a while.
Wait and see, perhaps, but it has traditionally been a resilient sector.
Oh, yes, it has.
We'll leave it there for today, and great to have you with us. In South Africa, Adegboyega Adebajo, Head of Structured Finance and Advisory Services from Diamond Bank.